Thank you, Madam Chair. Mr. Brooks, couldn't agree more with your comments. In 2020, the SEC adopted amendments to Reg D to allow for certain demo day communication to be exempt from being considered general solicitation or general advertising. The amendment also defined angel investor group for the purpose of federal securities laws. These changes were made to support startups discussing their products and business plans, demo day events, without it being considered an investment offering. Given that Reg D reform is on the SEC's Reg Flex agenda, and Democrat commissioners expressed their intention to chill private offerings, how critical are these changes made in 2020 to capital formation, and should Congress solidify these changes by codifying them into law?
Yeah, absolutely. It's a no-brainer because it makes it easier for people that exist outside the lines to get it in front of people without getting expensive attorneys and people involved. I mean, just if you have $10 in your bank account, how are you going to pay an attorney a couple thousand just to prove that you can present on demo day so you can raise money? It's crazy.
Right. Thank you. Mr. Ward, as you know, Regulation A enables companies to sell securities to the public with limited disclosure requirements compared to public companies. Despite its potential benefits, Regulation A still seems to be underutilized. How would amendments to Regulation A help small businesses raise capital?
I think Reg A, and I'll also include Regulation CF, are two great ways for companies to start their journey of raising initial capital. The two things I worry about in Reg A and Reg CF is creating two paths for companies, a Reg D path and a Reg A path. I think it creates issues around adverse selection bias and picking which path they should take. What I'd be supportive of is a way to merge Reg CF, Reg A with Reg D, so that Reg CF, Reg A could be a way to jumpstart companies in their local communities to raise their initial seed capital, and then they move on to Reg D status to start raising more institutional capital over time.
Would companies benefit from Regulation A if Congress raised the offering cap?
I think companies may benefit from that. I think it will benefit the larger, higher scale companies, but I still think there needs to be a path to Reg D. The amount of money most companies need these days to get to an IPO far exceed the current Reg A limits.
Appreciate that. Mr. Ward, there's currently no suitable regulatory framework for finders who, incidental to their primary business, help match potential investors with private issuers and receive payment for successful introductions. Today, finders are treated as broker-dealers due to the mishmash of SEC staff interpretations and no action letters. Is this a problematic framework for those seeking to make connections between investors and private companies seeking capital?
I think so. Today, the way that finders work in practice to circumvent the broker-dealer rule is they're usually anointed as advisors and given equity in the company to help the company. It's unclear if advisors will be a big part of the ecosystem. I think we're still learning about what role intermediaries have in the venture ecosystem and how to connect founders to investors.
Would exempting finders from broker-dealer registration eliminate ambiguity about when companies can engage finders who are not registered as broker-dealers? And would this help facilitate small business capital formation?
Yes, I think much like when we liberalized investment banking licenses to help founders sell their companies, I think if we can exempt finders from broker-dealer registration to seed an ecosystem of finders to help founders find capital, I think that could catalyze a much more liquid market for financings.
Thank you. In the time I have left, Mr. Trotter, during the passage of the Jobs Act, you were a leading member of the IPO task force and served as a principal author of the IPO-related provisions. Can you compare today's kind of political and economic climate to when that passed a little over a decade ago?
Well, there's one comparison that's clear to me, And again, you have this debate over more versus less regulation, and you know where that ends. It ends in stalemate. But my answer to that is follow the path that the Jobs Act took in Title I, the IPO on-ramp provisions. It's not about more versus less. It's about scaling the regulation. It's about balanced regulation so that the full suite of regulations apply to the largest enterprises and the new companies that are entering the public company system get a break. It's worked for 11 years very successfully.
Gentleman's time's expired.
Agree. Thank you.
It's time